And it's on that note, talking about high inflation and how central banks are countering that. It is not only a South African problem, and we expand this conversation with the Economist Redge Nkosi on what's expected on the domestic front. Welcome and thank you so much for your time, Reg. Let's first of all talk about the current consensus being that of a 75 basis point increase yet again when we get the outcomes of the Central Bank's Monetary Policy Committee meeting later today. What is your take on it?
Well, I go along with that consensus about 75 basis points. But again, it's a consensus that we agree, not because we have a clear or same understanding of the reasons behind it, but because, some of us think that there isn't anything the Reserve Bank can do because it only follows this particular route. So it will have to raise some rates. If it was conducting itself or conducting monetary policy that's sensible, that's different, we wouldn't even be talking about that. Now, they're talking of the U.S. Increasing its own rates there and us matching similar increases there. It's understandable. Again, it's because we use the interest rate policy, which necessarily is not the monetary policy. If you follow this through, why should we be going along with the U.S. When it comes to increasing their rates? Meanwhile, the U.S. has got so many tools to use for its monetary policy. We only have one. We don't have to compare ourselves with the U.S., should we?
So what could South Africa be doing differently, especially as you've just explained the manner in which monetary policy is delivered in South Africa? We do have a unique economic situation. We are teetering towards a recession along with the rest of the globe. But in the current landscape of the South African playing field is high unemployment as well as wages that are not going up, but the cost of living is way above what we've seen before. So another interest rate hike is going to mean more pressure on the consumer. How do we balance all those factors?
That's precisely the challenge. We don't have to follow the U.S. because the U.S. has got completely different dynamics. We're looking at very high unemployment here. We should be wondering, how do we go about countering it? Inequality is quite high. An economy that's not growing. Now, when you pile up another 0.75% on that, what they're trying to do is to kill the economy completely. That's not what you want, do you? In a situation where the economy is not growing at all. So the Reserve Bank and indeed government as a whole should have understood that the way we conduct our monetary policy is incorrect. Look at China now. China is saying they're going to be easy. Why should we be comparing also with the U.S. after all? The U.S. is not even the largest trading partner of South Africa. So we go back to the same story of saying, unless we change our framework, we're going to continue to suffer like we're suffering right now.
And that framework is unlikely to change anytime soon, Reg, but we must also talk about what the Reserve Bank speaks of in terms of saying that currently the rate hiking cycle is still moderate and somewhat feasible for a South African public. As an ordinary consumer, and many others would agree that it doesn't feel that way in our pockets.
Absolutely not. Absolutely not. We're looking at inflation now, it's 7.8, and the rate's about 6.25. If we pile another 75 basis points there, we're looking at 7. Surely that's not good enough for any person in the street. And the economy as a whole is suffering, so why should we be going that route? I've always argued that the best way forward for the Reserve Bank is to understand that interest rate is not the only tool they can use. They should use many measures, including credit control or credit as a tool. That's what countries like Bangladesh and so on are using. They sideline a mandate of price stability using interest rate and continue to use other tools. In that instance, like perhaps the U.S., they can even throw money into the economy. The economy is given money, SMEs are given money. Meanwhile, you are controlling the credit. That should be the way. Not just following up the U.S. Why we're following up the U.S. is the following to me. It's because should we not hike our rates? Not necessarily because of the inflation. We're following the U.S. because if we don't hike, then the differential in interest rates is going to narrow. That means that money is going to flow out of South Africa. Now, which money is this? This is hot money. We call that, investors or investment. It can't be. You can't call hot money investment money. All right? So we're basically trying to counter that. Instead of increasing or wanting to bring in true investment, we're looking at speculators, and these are the persons we're trying to impress.
Interesting take there. And as a parting shot, when you spoke about the policy framework and monetary policy that's delivered currently by the Reserve Bank, where are the impediments? Is it political, or is it an issue that needs to be dealt with directly by the South African Reserve Bank, especially because they've long argued for their independence outside of the political framework?
Well, I personally attribute to the Reserve Bank itself. Like I said here, the governor of the Reserve Bank of Bangladesh, who has got the same mandate as South Africa, simply ignored that mandate and said the national interests tell me I should do otherwise. So what he did, he cut interest rates, he sent money to the economy, SMMEs, and the very inflation came tumbling down from about 12% to 5%, having done that. So the stumbling block is not necessarily the government. It's the application of what we call monetary policy, or the Reserve Bank itself. That's where the problem lies. The Reserve Bank has got so many tools it can use to ensure that this economy grows, to ensure that the inflation is low. By them just wanting to stick to the interest rate, frankly, they're not doing us any favor at all.
Economist Redge Nkosi there saying the South African Reserve Bank has options outside of just hiking rates, but for now we are expecting that interest rate hike once again from the outcomes of the Monetary Policy Committee meeting, and it is the last gathering for that body for this year. That's it from the business desk. Still to come, Dumi Khaso will be bringing you the latest news from the world of sport.